Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 244 and oil is on the boil. So oil prices, despite several estimates by the Fed, by European central banks that oil will cool off in the last 3 months, has not done so. After this first correction from 134 dollar price, then down to about 99, and then back up. Now Brent is at 124 or somewhere close to that. So a persistent price of oil managed at 120 plus levels is causing tremendous amounts of trickle down inflation impact, and that is really causing all the trouble for most of the countries out there. Of course, Russian ruble is now at 57. They are really actually possibly starting to enjoy this great bonanza that they've got. I mean, their currency has gone from 75 to 120 back to 57 now. So very, very strong currency, and they're able to sell their oil now to even more diversified set of clients. Anyhow, coming back to our markets. So our markets opened weak on the back of overseas cues. However, markets have been oversold last couple of days, and an expiry bounce was anticipated. It bounced early in the morning, then fell back again, but then in the second half of the session it just kept going up on the back of mainly Reliance doing the honors of pulling the Nifty up. All sectors except metals and some banks were down, but largely the losses of last week on many of these sectors was recovered today. Market still is not out of the woods, I would say, but yes, that extreme oversold position has kind of taken care of itself, and metals and some banks, of course, bearing the brunt after this another RBI hike yesterday. In terms of weekend investing, small cases, let's take a look at the indices first. So small caps remained relatively resilient today, even when Nifty was down almost more than 0.5%. Small caps were not down as much, and Nifty recovered back on the back of some large caps, and small caps did not recover back too much as well. So small caps and mid caps did not really participate much in today's moves. Nifty, however, was up 0.75%. Nifty Next 50, CNX 200, they were all up nearly 0.7 to 0.8%. In terms of weekend investing, small case performances, NNF 10 putting in a very good performance at 1.3%, MI ATH2 at 1.2%, MI 25, MI EverGreen, NG 50/50, MI 35 all doing quite well. MI 50 and MI LTCNX 200 small case platform is yet to update that on the basis of AU Bank bonus event today. So these are actually positive, but currently because of their index calculation they are negative. So all in all, a reasonably okay day for weekend investing, small cases as well. In terms of the heat map of the day, you can see the star performer is right here. The largest stocks of the Nifty and our markets went up 2.7%. So a large chunk of today's gain came on the back of Reliance, and then it was well supported by HDFC Bank, Kotak Bank, TCS also up, Infosys up 1%, ITC up 1%. Where were the losses? So essentially some banking names, SBI down 1%, Bajaj Finance down 1%, and of course in metal space we saw a significant cut in Tata Steel at -4%, Grasim minus 1.4% in cement, Ultratech also down 1%, Asian Paints down 0.6%, and some energy stocks also going off. But ONGC, Coal India, BPCL, HPCL, Oil India, all these stocks were nicely up. Pharma were also up to some extent. Top names in CNX 500 gainers: PNB Housing up 15%, Tata Tele, IFB Industries, Suzlon all up 9%, 9 to 10%. Oil India, as I mentioned, up 6%. IFB Industry more on the back of news/rumor that India will sort of restrict the import of refrigerators, etc. So that is another sort of a protectionist move that we may get, and IFB Industries was up based on that. In terms of losers, Ratan India down 5%, Brightcom, EPL, Strides Pharma and Trident all down between 4 and 5%. So several of these names also are there in our portfolio, so we got hit because of this couple of stocks on that. Oil, as I mentioned, this is a oil, Brent oil in INR. So while we are talking about USD oil, and it has not breached its all-time high of 140 made in 2008, but look at what is happening in our local currency. In 2008 we were at 6,000 rupees per what is the unit here, so I guess it is per barrel, and where it has reached now is 9,591. So almost a 50% or more jump has happened since our peak in 2008. Then there was a peak in 2013 at around 7,500. So in every iteration we are just going up and making a new peak and coming back to this 200 month average, and then going up again. Maybe somewhere we will make a top and come back somewhere down, but this leg going from 2,000 to 9,500 now is immensely damaging to our oil import bill, and this is not something that we can just close our eyes to, because this is impacting. It's a trickle down inflation impact where every industry, every input gets a inflationary impact from oil, whether it is due to transportation, whether it is due to consumption or energy cost. Although if we see the RSI on this on a technical front, we are definitely very, very overbought, and there could be a cool off that will be coming here sometime, but as we can see here, it can remain overbought for some time while the oil keeps going up. So we never know where we are going on this, but this is getting even accentuated because US dollar INR is also at all-time high. So not only crude oil is in dollar terms at all-time high almost, but even USD INR is at all-time high, and this is despite the fact that RBI has been vehemently defending the INR from falling. Otherwise, my sense is that we could have been in early 80s by now, given that other currencies are falling. So despite the best efforts of the RBI, USD INR is also at an all-time high, and that is really causing a double whammy sort of headwinds for the economy. Some other insights today, so essentially on following the process. So my comment here was that tops get made while we expect higher upside. So whenever market is going up, we keep expecting that it will keep going up, and whenever it is going down and bottoms are getting made, we keep expecting that it will keep going down further and we'll buy it lower, or while it was going up we will sell it higher. But this keeps happening to us, and only after we have bottomed and gone up, we realize that we should have bought there, or it has topped and come down and we say okay, we should have sold there. So it's all a hindsight sort of analysis that we do, and this keeps happening every time. I've been in the market 27 years now, and I cannot predict even 2% of the times what is going to happen. So the only hack, if you wish to call it that, out of this problem, and so that you can have a peaceful sleep and a peaceful investing experience, is to create a strategy. Have a strategy. If my stock goes, if I've identified the stock, if stock goes below 200 DMA, I'll buy there. Or if you are a momentum player, then I will not buy below 200 DMA. I'll buy it if it goes above 550 DMA, for instance, or I'll buy it at all-time highs. I'll exit if it goes below ATR. Some strategy that can create a framework for you so that you come out of this guessing game. This guessing game is actually the most difficult game, and it is full of regret. Even if you make money in the market, but it is full of regret, that is not a good thing. So if you make less money but with full confidence and with no regret, that is better, I think, in terms of feel good that you get out of the market. Also another sort of unsolicited free gyan for young folks, and you can troll me for this, that while 3 to 5 years may look like a very long period, when we are talking on a day-to-day basis, we are following market on a day-to-day basis, we are seeing our P&L on a day-to-day basis, we lose that 50,000 feet view of what we are doing, because we are so micro managing day to day that we don't know where we are going. But if you have a planned effort towards any life activity, I'm not just saying investing, it could be health related, it could be a financial related, it could be a strategy that you pursue, it could be any profession or any expertise that you are pursuing. 3 to 5 years, if you are able to pursue it and do it with a plan, it will be a gigantic outcome, the one that you cannot imagine. And I can tell you with example, for instance, weekend investing was started 5-6 years back. 2016 is when we started weekend investing. We had 0 clients, we had 0 followers on Twitter, we had 0 revenues. And in 5-6 years, we are now, hundreds of thousands of Twitter followers, tens of thousands of user clients, amazing amount of business coming through. But all because we were able to do one step at a time without really, getting bogged down with what has happened today, or what happened yesterday, or what will happen tomorrow. You have to take a larger call and just keep on doing it small steps at a time, and you'll reach there. And it happens in every, you want to lose weight, you lose 10 kg of weight, and it will seem gigantic, you'll not be able to do it. But you go for a walk, you go for 30 minutes of walk every day and try to do it every day. You'll see that in 6 months time, 1 year time, 2 year time, it will all fall into place. So just sorry if I'm digressing from the main topic, but 5 years is a good time to totally renew what you're doing in life. It can reset and reboot your life, any stage of your life, not just for youngsters, I would say. I started this at age of 45, 46. So it can be done anytime, anywhere, anybody can do it. So just a small digression from there. Thank you so much for watching this and sharing it with your friends and family. I'll see you in another video. Bye.